All right, so welcome to your personalized deep dive. We've got a pretty interesting set of documents here today.
Yeah, it looks like a lot to get through.
JM Financial Limited, specifically their Q2 FY25 investor presentation. We've also got the auditor's review report and even some letters to the stock exchanges, all dated October 25th, 2024.
Very recent then.
So today we're going to unpack all this and figure out what's really interesting.
That was really important.
And what it all means for you, the listener.
Yeah, and I got to say, one thing that jumps out at me right away is the strategic shift. Looks like JM Financial is moving from an on-balance sheet to an off-balance sheet business model.
Interesting. Yeah, it does sound a little technical, though, right?
It does.
Could you break that down a bit?
Sure. So imagine GM Financial used to be like a traditional bank lending directly to companies. But now they're more like a matchmaker connecting investors with companies who need the money.
So less risk for JM Financial.
Exactly.
Yeah.
And potentially higher returns. They can focus on higher return areas. More specifically, the presentation mentions affordable home loans,
Yeah.
private credit syndication,
Yeah.
and bespoke financing.
Interesting. So areas with a lot of growth potential.
Absolutely, especially in India.
Yeah, for sure. Now, this strategic shift,
Could be a real game changer.
yeah, I think so too. We'll definitely have to see how that all plays out across their various business segments.
For sure.
But first, you mentioned syndication a couple times there. Can you explain what that actually means?
Oh, of course. Basically, syndication is when a bunch of investors get together to fund a loan,
Okay,
so it spreads the risk around.
got it.
So instead of JM Financial taking on all the risks themselves, they're more like the connector, bringing borrowers and investors together.
Makes sense.
A strategic role.
All right, so let's dive into their different business segments, then see how this shift is playing out in practice. First up, let's talk about investment banking.
Okay, yeah. So JM Financial, they're consistently ranked as one of the top investment banks in India. They really excel in equity capital markets and mergers and acquisitions.
They have a pretty big team, right?
Huge team, 175 professionals. They also cover research on over 250 companies.
Wow. Talk about covering their bases.
And they've been involved in some really big deals lately, like the Bajaj HFC IPO,
Right.
the Vedanta QIP, and the Nexus Select Trust block deal.
Impressive.
Significant transactions. Really shows their expertise and, their standing in the market.
Yeah, and that expertise seems to be translating into some pretty good financial results, right?
Absolutely. Their investment banking revenue and profit just jumped over 80% year-over-year growth this past quarter.
Wow, that's a pretty big jump.
Shows their focus on this segment is paying off.
Big time. Okay, let's move on to wealth and asset management. It seems like JM Financial is really trying to build up those recurring revenue streams.
Yeah, the reliable income. It's a smart strategy.
Everyone seems to be talking about that these days.
Well, and they've had some really impressive growth in their assets under management, or AUM.
Yeah.
Their mutual fund AUM has tripled, which is
That's incredible.
a whopping Rs 12,516 crore.
Okay.
And their portfolio management services segment, that's doubled in size.
That's really impressive.
It is.
It's clear that they're making some serious waves in the asset management world.
Definitely.
And they're not just sticking to traditional methods either. I mean, they launched their new broking platform, BlinkX.
Yeah, that's smart, embracing the digital world, especially in a market like India, where tech is such a big deal.
Absolutely. So they're offering digital investment options, making it easier for more people to access these opportunities.
Yeah, exactly, expanding their reach.
Okay, let's shift gears now and talk about their affordable home loans segment. This is a sector with huge potential.
Oh yeah, massive potential in India with its growing economy.
And it looks like GM Financial is really taking it seriously.
They are. They've got a great credit rating AA. That shows they're in a strong financial position.
That's good.
And they emphasize that their loan book is very granular, meaning they're making lots of smaller loans instead of a few big ones.
Right.
Helps manage risk.
Like spreading your bets instead of...
Putting all your eggs in one basket.
Yeah, exactly.
So their cost of borrowing is around 8.5%, which is good. Allows them to earn a healthy spread.
Speaking of those loans, I found some interesting stats in these documents. The average loan size is Rs 10 lakhs. The loan-to-value ratio is 58%. And their loan book seems pretty geographically diverse.
Those are all good signs, yeah. Seems like a well-managed and growing segment.
Definitely. All right, let's move on to private credit syndication. Now, this is where JM Financial uses its strong balance sheet and their ability to find those promising lending opportunities to attract bigger investors, right?
Exactly. They're basically saying, hey, we're really good at finding great companies to lend to. You want to join us?
Right, right.
And they're smart about it too. Instead of taking on all the risks themselves, they typically syndicate 80 to 90% of the loans.
So they only keep a small portion.
Yeah, small portion on their own books. It's a way to mitigate risk while also generating fees.
That makes sense. And they're not just focusing on one type of borrower either.
No, they're targeting a good mix. Large established companies, smaller growth-driven businesses,
A diverse approach.
helps them build a robust portfolio, reduces their exposure if any one sector or company has trouble.
Okay, so we've got a diverse portfolio, reduced risk through syndication, a solid track record. Sounds like a pretty compelling case for investors. Now, let's zoom out a bit and look at their overall financial performance for the quarter.
Okay, so their revenue came in at ours 1,211 crore, which is a 10.7% increase compared to last quarter.
Not bad.
And their adjusted profit after tax, or PAT, that jumped a remarkable 36%
Oh,
to ours 232 crore.
those are some serious numbers. What about their return on equity?
Their annualized ROE for Q2 is 10.8%.
Hmm.
Okay, which is, not bad, especially considering they're in the middle of this big strategic transition.
Right, still early days for this new model.
Exactly. But it suggests that things might be moving in the right direction.
We'll have to see how that number evolves.
Yeah, for sure.
Now, their debt to equity ratio, that's down to 1.25.
Much healthier financial position.
Always good news for investors. Less debt means less risk.
Absolutely. But before we get too carried away with all the positive news, we do need to consider the auditor's review.
Right, right. Always have to look at the fine print. So what did the auditor, KKC and Associates LLP, have to say?
Well, they issued a clean audit opinion, meaning they didn't find any major issues with the financial results.
Okay, good.
However, there are a couple of emphasis of matter paragraphs we need to unpack.
Emphasis of matter. Okay, what are those all about?
So essentially, they highlight some regulatory challenges that JM Financial's been facing,
Oh, regulatory hurdles. Never fun.
especially in the financial world.
Yeah, for sure. So what kind of challenges are we talking about?
One of them is a SEBI order that prevents JM Financial from taking on new lead manager mandates for public debt issuances. This restriction is in place until March 31st, 2025.
Okay, so that's temporary, at least for now. Unless SIBI decides to extend it.
Right. And then the other challenge involves JM Financial Products Limited, a subsidiary of JM Financial. The RBI actually restricted them from lending against shares.
And that was a pretty significant part of their business.
It was. It stemmed from an ongoing investigation.
I see. Did the RBI say why?
Well, there is some good news, actually. The RBI conducted a special audit, and based on their findings, they lifted the restriction just recently, on October 18th, 2024.
Oh, wow. That's a big relief for JM Financial. Removes a potential roadblock. It
Exactly.
allows them to get back to business.
It does. But these regulatory issues, they do remind us that even successful companies face challenges, right?
Yeah, for sure. Something investors should definitely keep an eye on. Okay, now let's talk about JM Financial's commitment to corporate social responsibility, or CSR. Their investor presentation highlights several initiatives.
Always nice to see a company giving back.
It's not all about the bottom line. So, one initiative that caught my eye was Project Bakpan.
Yeah, Project Bakpan focuses on early childhood education in Bihar, one of India's most populous states.
And they've also got Shiksha Samarthan.
Right, that supports education for underprivileged students.
They've also got digital literacy initiatives in Bihar and Maharashtra, and they're even supporting the Maitri Karuna Netralaya Eye Hospital.
In Bihar, yeah, so they're investing in education, healthcare, and community development.
It's not just good PR either.
No, it's about building goodwill, brand loyalty. JM Financial is really positioning itself as a company that cares.
For sure. And, these days, consumers and investors are paying more and more attention to a company's social impact. So to wrap up this first part of our deep dive, we've seen JM Financial embarking on a pretty bold strategic shift, moving towards a less risky, fee-based model.
And they're showing impressive growth across several segments. Investment banking and asset management are really standing out.
But they are facing some regulatory headwinds.
For sure. We'll keep an eye on those.
And of course, they're demonstrating a real commitment to corporate social responsibility.
Yeah, which is great to see. But we've only just scratched the surface.
Stay tuned for part 2, where we'll dig into some of the finer details. It's going to get even more interesting, so don't go anywhere.
We'll be right back.
Okay, so welcome back to our deep dive into those JM Financial Q2 FY25 results.
Yeah, we covered a lot in part 1.
We did. Their strategic shift, some of the highlights from their performance, but now it's time to really dig into some of the details.
Right, those things that, might not be immediately obvious.
But can tell you a lot about a company's future.
Exactly. So one thing that caught my eye was the auditor's note about certain subsidiaries whose financials weren't fully reviewed by their respective auditors.
Okay, now why should we care about that?
Well, to be honest, these subsidiaries, they only represent a tiny portion of JM Financial's overall revenue and profit.
Okay, so not a huge deal.
Not a red flag, no. But
like a little yellow flag.
yeah, maybe a little yellow flag. It just creates a bit of uncertainty, like a few missing pieces of the puzzle.
Okay, so we don't have the complete picture. Anything else in these documents that jumped out at you?
Yeah, actually, there was a mention of an associate company, JM Financial Trustee Company Private Limited. And again, the auditor only reviewed JM Financial's share of its profit, not the whole financial statement.
So another incomplete piece.
Right. It's important to be aware of these limitations, but it is fairly standard practice,
Okay.
especially for companies with, more complex structures. But here's something that I found really interesting in the investor presentation. They talk about plans for their treasury and other assets. Seems they're waiting for RBI approval for a pretty big transaction.
Okay, tell me more. This sounds interesting.
They want to acquire stake from INH Mauritius to increase their ownership in JM Financial Credit Solutions Limited from 47% to 90%.
Wow. Okay.
And we're talking about a significant amount of money here around ours, 12,282 crore.
That's a serious investment. So what does that tell us?
Well, it shows they're really serious about the credit solutions business.
Yeah.
See it as a key growth area.
Yeah, makes sense. It definitely aligns with all their talk about private credit syndication and, becoming this connector, the matchmaker.
Right.
Did they say anything about where the money for this acquisition is going to come from?
Well, the presentation also hints at potential dividend payouts. They mentioned their incremental capital requirements are pretty low, which could mean more money going back to shareholders,
That's always good news for investors.
especially those looking for income from their investments.
Yeah. All right, so now let's talk about their future plans. The investor presentation gives us some pretty good insights into their priorities for each business segment.
It does. So for their integrated investment bank, it's all about expanding their client base,
Okay.
attracting top talent.
Makes sense. Cementing their leadership position.
Exactly. In mortgage lending, they're taking a two-pronged approach. Wholesale side, they're emphasizing franchise-enhancing syndication, which we talked about earlier,
Right.
but maintaining that strong risk management. And for retail mortgage, it's about building scale, increasing productivity, and even deeper penetration of their existing geographies.
Growth and efficiency.
Yeah.
Yep.
And then for alternative and distressed credit, their priorities are pretty clear. Focus on co-investments and resolving existing accounts.
Sounds like maximizing returns from that distressed asset portfolio.
Exactly.
Yep.
And finally, for their platform AWS, which is their platform for individual investors, it's all about digital readiness, expanding their distribution network and getting new assets and clients.
Sounds like they're going all in on technology,
Yeah, trying to reach a much wider audience.
especially individual investors.
Right. Okay, so we've got a pretty good understanding of their goals, but what about potential risks, challenges they might face along the way?
So that's always the key question.
It is. So one risk factor we already talked about is that ongoing SEBI investigation.
Right. That's definitely still a concern.
The outcome could have a pretty big impact on their investment banking business.
We'll have to see how it all plays out.
We will. Another challenge is competition. The Indian financial services sector is really competitive these days.
Lots of players, new and old,
Exactly. And then there's technology.
keeping up with all the advancements.
Absolutely. The fintech landscape is changing so rapidly. And of course, we can't forget about the broader economic environment. Interest rates, inflation, global market volatility.
All can have an impact.
They can.
Yeah.
So yeah, a lot of potential headwinds. They'll need to manage those carefully.
For sure. Okay, let's talk about their corporate governance structure. Always important to understand that, especially in the financial services sector. Can you tell us a little bit about their board of directors?
Sure. They have a good mix of professionals, diverse backgrounds, finance, accounting, law, marketing, even someone from the Indian Administrative Service.
Seems like a well-rounded group.
Their chairman is Nimish Kampani. He founded the JM Financial Group,
Right.
over 50 years of experience in the industry. And his son, Vishal Kampani, he's the vice chairman and managing director. He's been really key in expanding their operations.
So you've got experience combined with fresh perspective.
Yeah, a good balance. And importantly, they've got several independent directors on the board. Really important for good corporate governance.
What can you tell us about some of those independent directors?
Well, Roshini Bakshi, for example, she's got tons of experience in consumer industries. She was the CEO and managing director for Walt Disney Company, South Asia.
Interesting.
And then there's Navraza Wadia. He's a co-founder and partner at Alpha Wave. He used to work at JP Morgan and Goldman Sachs.
Investment banking background?
Exactly.
Very relevant.
Yeah. And then P.S. Jayakumar, a real veteran banking professional. He was MD and CEO for Bank of Baroda.
Okay, so they've got a lot of expertise on the board.
Yeah. Deep industry knowledge, financial expertise, a global outlook.
Seems like they're in good hands.
It does. Okay, so let's shift gears a bit and talk about risk management.
Yeah.
How does JM Financial approach risk? Because the financial market can be pretty complex.
Yeah, that's an understatement.
Right. So they've got a pretty robust risk management framework. Independent processes for identifying, measuring, and managing risk across all their businesses.
So it's not just one central team.
No, it's integrated. And they've got regular risk meetings and reporting mechanisms for transparency and accountability.
Okay, sounds like they're taking it seriously.
They are. They also have a comprehensive internal financial controls framework with risk control matrices across the entire group. And they bring in external audit firms, too, to review their processes and policies.
All right, good to know. So they're being proactive.
Yeah, and another thing that's good is they've been really transparent about the regulatory issues they've faced.
Yeah, we talked about those.
Right. They disclosed all the details in their financial statements and provided updates on how they're trying to resolve them.
Transparency is important, especially when there are potential problems.
Definitely.
Okay, so we've talked about numbers, but what about the qualitative aspects of JM Financial's business? Those things you can't always see in a spreadsheet.
Right, the human element.
Exactly. So what kind of qualitative factors should we consider?
Well, their brand reputation and market standing are super important. They've been a major player in the Indian financial services sector for a long time, over 50 years.
They've seen a lot of changes.
They have. Upswings, downturns, market crashes.
And they're still here.
And consistently ranked among the top players. Their brand is really valuable when it comes to attracting clients and investors.
Yeah, it's like a seal of approval, right?
It is. Another key factor is their management team. We talked about the board, but what about the broader leadership team?
Yeah, how effective are they?
Right. And the presentation highlights their focus on attracting and retaining top talent.
And they've been making some key hires, right?
Yeah, in investment banking, affordable home loans, building their capabilities for the future.
Okay, so strong leadership, experienced professionals.
Commitment to talent development. All good signs. But, there's also corporate culture and values. Those play a role, too.
Right, how they do business.
Exactly. And their presentation does emphasize ethical conduct, transparency, social responsibility.
We talked about their CSR initiatives.
Right, but it's hard to fully grasp a company's culture just from the outside, But you can get clues. Look at their communication style, their approach to employee development, their overall track record.
I mean, their investor presentation is well-written, easy to understand. That says something.
It does. And they highlight their training programs, so they're investing in their people.
Yeah. And they've got this long-standing reputation for ethical conduct, which isn't always easy in the financial world.
Right, that's a good point. So it seems like they've got a good culture.
Integrity, professionalism, social responsibility.
Yeah.
So strong brand reputation, experienced leadership, positive corporate culture, combine those with their financials, their strategic vision. That's pretty good, right?
It does. But again, no company's perfect. They've still got challenges, potential risks.
We talked about the SEBI investigation, the competitive landscape.
Exactly. Now, to really understand JM Financial's prospects, we need to zoom out a bit. Look at the bigger picture. the Indian financial services market.
Okay, so how's the market doing?
Well, one of the biggest trends is technology.
Yeah, fintech, changing everything.
Right. Another big trend is the growing middle class. More and more demand for financial products and services.
India's got a huge young population.
Exactly. A massive market opportunity. And JM Financials focus on affordable home loans, their digital platform. That all aligns with this trend.
Makes sense. But what about regulations? Always a factor in finance.
Always. India's got a complex regulatory environment, and it's always changing.
That SEBI investigation's a good reminder of that.
It is. And then there are global economic trends.
Right, things happening outside of India can still have a big impact.
Exactly. Interest rate hikes in the U.S., for example. That can affect emerging markets like India.
So a lot to consider.
There is.
Yeah.
It's a really interesting time for the Indian financial services sector. Challenging, but exciting.
For sure. So we've looked at their financials, their strategy, risk management, corporate governance. We've talked about the market, and we've considered those qualitative aspects like their brand and their culture. What's next? What's the final piece?
Well, now we bring it all back to you, the listener.
Right. Why does all this matter?
Exactly. What are the key takeaways? What should you be thinking about as you evaluate JM Financial?
That's the big question.
It is. So one key takeaway is that JM Financial is transforming. Their strategic shift towards this fee-based, syndication-driven model, it's a big move.
And it's not guaranteed to be successful.
Right. They need to prove they can do it.
Attract those investors, manage the risks.
Exactly. And remember, they're operating in a very dynamic market. Fintech, the growing middle class, all those regulations.
So many factors at play.
There are. But they do have a lot going for them. Their brand reputation, their leadership, their risk management.
Those are all positives.
They are. And we can't forget their commitment to corporate social responsibility. Their initiatives show they're trying to be a good corporate citizen.
Definitely a plus.
So here's the key question for you, the listener. Does all of this, does JM Financial's story align with your own investment philosophy and your risk tolerance?
That's a great question because in the end, it's all about your individual goals and priorities.
It is. We've given you the information, the insights. Now it's up to you to decide.
Welcome back to our deep dive. We've dug through a lot of JM Financial's Q2 FY25 results, but sometimes it helps to, look back a little.
Absolutely. A company's history can tell us a lot about where they might be headed. So let's rewind the clock a bit.
A good origin story is always fun.
It is. So JM Financial, they started back in 1973.
Okay.
Stockbroking and securities were their first ventures, and they've been expanding ever since.
It's amazing how much the Indian financial landscape has changed since then.
It really has.
What were some of those big moments for them?
Well, in the late 90s, they formed a joint venture with Morgan Stanley.
Wow, a global giant.
It was,
Yeah.
and that really exposed them to, international best practices,
Yeah.
broadened their horizons. The partnership ended in 2007, but that experience really left a mark. Global mindset, focus on excellence.
Did they stick to those early areas? Or did they branch out?
Oh, they definitely branched out. Late 2000s, early 2010s, they got into things like distressed credit, real estate finance, corporate lending,
Sounds like they were always looking for the next big thing.
always adapting. They were also strategic about their acquisitions and divestments. Buying and selling businesses to stay aligned with their goals.
Always evolving.
Exactly. And this current shift, their strategic pivot, it's another example of that.
Yeah, that move towards a fee-based, syndication-driven model.
Bold move.
Yeah.
But it shows they understand how the industry is changing.
So looking at all this, their past, their present, it seems like they're in a good position to handle what the future throws at them.
I think so. They've learned a lot along the way.
But let's bring it back to these Q2 FY25 documents. What are the big takeaways? What should our listener remember?
Well, the biggest thing is that JM Financial is in transition. They're transforming their business. This shift towards an off-balance sheet model, it's a big change.
It is, and they still have to prove it'll work.
Right. Build those syndication capabilities, attract investors, manage the risks, and they're doing all this in a very dynamic market.
Yeah, we talked about that. Fintech, the growing middle class, all the regulations.
A lot to keep track of, but their brand, their leadership team, their risk management, those are all strengths.
And their commitment to social responsibility. Can't forget that.
Definitely a plus. So for you, the listener, here's the question. Does JM Financial's story resonate with you? Do you believe in their vision?
Do their goals align with your investment philosophy, your risk tolerance? It's time to think about what all this means for you.
We've given you the information, the insights. Now it's up to you to decide.
Thank you for joining us for this deep dive into JM Financial. We hope you found it helpful.
And until next time, happy investing.